Oh, what's up, Jamie?
Steve, happy Monday. What's happening?
It's a happy Monday. Thank you. Yes, ready to go. Happy Monday.
Isn't that the name of a band from back in the 80s? Happy Mondays,
Happy Monday?
something like
Could
that.
be. I don't know. There was one band that had a horrible name, and then they changed their name to Basket of Puppies. I thought that was a brilliant PR move. I forgot who the original name was. Anyway, yep. All right. Happy Monday to you, Jamie. Happy Monday to you, Albert. Hello, everybody.
Yes,
Thanks for showing
Monday to
up.
everybody out there, and thank you for taking the time out of your busy Mondays to come hear what Mr. Gomez and myself have to bestow upon you today. So welcome. It is March 20th. Seems like, boom, it seems like it was March 1st, and now the month is almost over. So time is zipping past us at a stellar rate. So before we get into the meat of the agenda today, want to just take a quick moment here, get the lawyers happy. Just want to make sure that everybody here is aware that we are distributors of information. So everything that we share with you guys here today, strictly for educational purposes. If you do need investment advice of any type, please seek out a registered investment advisor or some other registered person that is set up to do that. You can find it very easily. So having said that, on to our extremely packed agenda after we take just a brief moment to tell all the new people about what we have going on here at Trade Ideas. It's not just the award-winning technology that we've been building layer upon layer over the past, what is it now, 14 years, I believe. But it's the community that we've created around that technology. Which kind of separates us from anybody else out there. The technology alone does that, but when you add these other layers of community, it really balances the equation nicely. So, of course, today's Monday. Every Monday it's myself and Steve riding shotgun. But before we even get on to the remainder of the webinars, kind of the central focal point as well is the Traders Room that is free and open every session, moderated by Barry Anderson, who is a great trader in his own right and does a very good job at moderating that room. So whether you are a member or not, you can sign up for that free trading room. So take advantage. Tomorrow's Tuesday, Steve. You get to talk about that great Trade of the Week that's sponsored. Right. Of course, Steve has the helm on Tuesdays. Andy rides shotgun. Bring in a little bit different of a cast and crew on Wednesdays with Dan Merkin and Brad Williams, always entertaining and enlightening. And then Andy gets to round it all up on Thursdays with his trading studio, and I ride shotgun with him. So really good places to gain knowledge about the product, get other traders' takes on things in the trading room, etc. All right, so Steve, how about I pass the baton to you really quick here?
All right, let me clean my screen up.
Your itchy, scratchy Moku on the indices here.
There we go. I will blow this up nice and big, and we'll do what we normally do. We talk about the bigger picture and a couple of different sector quadrants, starting, of course, with the SPY, which is the ETF for the S&P 500. If you don't realize that, this is going to track the S&P 500 as an ETF. And we've been using these horizontal lines as levels of interest all along the way, just to try and really keep it simple. This latest line right here, we can see many attempts to close below, including today, another attempt to close below, but a failure to close below because that darn pesky 3 o'clock, 3:30 buyer seems to come in. Money seems to get put to work in the final hour of the day. And that's what happens, and that will continue to happen until it stops happening. And hopefully when it stops happening, we'll be able to have something else to talk about and maybe start looking at some bearish type of alerts. But for now, the market is still in buy the dip mode. Pressure comes into the morning, and then stick save comes into the afternoon. But in the bigger picture, using our daily charts here, this particular orange line. If we get a close, say tomorrow, that's back down inside this area and cannot manage to close, which it did today, I mean, just barely by a hair above this orange line. You know, if we get price action that starts to get sloppy and lackadaisical and falls back down and closes in between these two orange lines, then we've got to put up a red flag. But for right now, it's basically broke out. It's just skipping along that level that it broke out. Prior resistance has been current support for the most part, at least at the end of the day. A couple of chances intraday to try it, but by the time we get to the end of the day, this line is still holding. We'll see how much longer that can hold up. The Qs. Similar situation, using this same line as the breakout line. They've only been above 1, 2, 3, 4 days. You can see the last 2 days have been a little sketchy at the most part of trying to stay above and close above that breakout level, which looks to be about 130, 170, we'll call it. So again, same thing goes on here. Tomorrow, if we come back in and we got a red candle and we've closed back below this particular orange line that we've just put 4 closes above on, then we're starting to move backwards and we're losing our momentum. We do have a higher high here in the Qs, but I looked at it on another chart using some stochastics. There's actually some divergence going on here. I try not to get too caught up on that esoteric stuff, but for those of you who know what RSI or stochastic divergence is, there's some of that starting to show up on here. The price action is actually moving higher in price action, but our action in stochastics are not making a new high. They're making a lower high, and that's what we call divergence. So that's showing up on the Qs, not necessarily here because we don't have that indicator. Lastly, the diamonds are also, for the most part, you know, shoot, we can just draw a line right here together. That's where they broke out from. And you can see 1, 2 days below, but a nice recovery. 1 day bounced right off, 2 day. So this is our line in the sand for the diamonds. So pretty simple, guys. Diamonds, spiders, and Qs, oh my. They're all holding above their recent breakout level. But as we move forward, if they drop down into the range and can't manage to post a close, because again, the closing prices are what we are mostly focused on. If we can't post a close above this particular orange line in the Dow, then again, that index is going to start to show some degradation. And speaking of degradation, can't even get out of its own way is this IWM. You know, I even thought maybe last week we'd come up here and push through, and if we could get this IWM, which by the way is the ETF for the Russell 2000, which basically tracks our smaller cap type stocks. If we could break out of this level here and close above for a few days and move higher, that could give this entire market another set of legs. But it doesn't, or if it doesn't, we may never know, because this particular ETF just cannot seem to get out of its own way. We've been talking about this for weeks on end now. Again, the spiders trending nicely, the Dow trending nicely, the Qs trending nicely, but these guys just can't get out of their own way. So I think you know, a couple things could happen. If the market does soften up a little bit, these IWMs are not going anywhere. Option number 2 is for them to find a way to close back above this orange line and maybe, like I said, become a catalyst and a reason for some second wind or some new fresh legs for this market to move higher. But for right now, we're just kind of slopping around in no man's land trying to see where we want to go. I don't think there's any major fundamental news on the horizon, such as a FOMC report or major earnings or employment reports. So I think we're kind of in the clear unless any black swan comes along. But until then, we're just going to key on what the price action is. Again, today we barely hung on, just closing just above that orange line. So keep an eye on this level. If we close below these levels, then all of a sudden we're going to raise some red flags. Shorting might start working again, and we could start to see some give back and some sloppiness in the market. And that's really all I got today for the general market in hand. I'll have some more other type stuff for you guys tomorrow when I do my webinar, but any questions or anything I didn't touch on that you see here, Jamie?
Well stated, and I mean, it is what it is, you know, and it's been repeat, you know, except we're a little bit higher than the previous consolidation.
I mean, look how high those Qs are. It's just blasting back into blue skies. I mean, if we get back above this level right here, we're back in all-time highs again, and there's nothing to look left to. But if we can't get out of our own way here and start to just fall back into the range, you could start to see some sloppy action.
And of course, we don't like to dwell on the past or look at the past and go, oh, we know the future now. But, we just had a very key adjustment in the whole macro scale of things, and that was the first ratcheting up of the interest rates, right? Quarter point, right? So, how many 20-year cycles do we get as humans on this earth to look back and go, I've seen this movie before. And as I recall, in the mid to late 90s, that's when the ratcheting of the interest rates started and the Greenspan rational exuberance and all that. So it seems kind of to me that, well, interest rates hiking, the first of what could be many to come. So no guarantee that we're going to grind higher. We all have a front row seat, but, just some observations from the past.
And that's one of the reasons I did. Well, you know what? I'm gonna break tradition here. I'm just gonna do it anyway. Here's the cues. I want to demonstrate what I saw earlier, and I use break that tradition of using free stock charts here. This is the cues, and as we made a higher high right here, look down to our stochastics. We're in the overbought level. All right, interesting. But then the price makes a new high up here. Stochastics can't get back to the old highs. That's kind of a downtrend with the uptrend in price. That's what we call a divergence. And that, to me, over many, many, many years has always been a very solid red flag, caution flag. So mixing that, trying not to get too technical, but mixing that with the stubborn price action of the prices and the SPYs, not wanting to go much higher, but not wanting to really dive back and close into this range. We're just in kind of a sluggish mode here right now. So we'll see how that resolves. All right. I guess that's it. Back to you. So I'm going to send it back to you, James.
I grabbed it.
Okay.
Okay. All right.
Gotcha.
So, Holly, let's talk about what our statistical model did today. And it seems like Mondays have been kind of lackadaisical as of late, to use the boring term there. Okay. So, Holly today, here are the strategies that she showed up with today. So we had a total of 8 longs and 3 shorts nestled in here. Now we can see only these guys fired off trades today for a grand total of 9 whole trades from Holly today. Now, before we move on here, that just triggered a thought about, well, we do a podcast on Fridays now, and myself and Dan hosted on Friday, and we had Barry from the trading room pop in and visit with us. And we were talking about the evolution of Holly and, how he has grown and watched Holly and now considers it an integral part of his alert windows and top list assortments because, that's all Holly is, another high quality information source that we can put to use. But he said his favorite strategy is wake up call. And I've been hearing that, from a lot of users like, oh, I love wake up call and sunrise movers when it shows up. I really love those strategies. And here we have Barry saying he's a big fan of wake up call as well today or on Friday. But then we look at wake up call today. Little wake up call did spit out 3 trades, and that zero's not in there by mistake. It lost on the 3 trades. But total loss on 3 trades, 7 cents, right? So when we see the statistical model as a whole, or when we see our favorite strategies, and of course those are going to be different for each and every person out there, right? But when we see the statistical model getting up to, say, 61 cents, a little over 61 cents today on the total P&L, coming up here, everything looked good on the beginning. We come up here and we take a pullback and we never get back up there, all right? So on a day like today, after everything was said and done, 35 cents, and then boy, if we would have been trying to hold every position today, would have been a lot different, okay? And also too, if you're watching these little risk on and off price charts as the day progresses, when you see this and then you see the breach here, as we like to talk about all the time, most of the days where the statistical probability has less and less noise and Holly's performance is green all day, we typically never see a retracement back to here. Maybe a little bit of noise and then it catches. But of course, today it never happened. And on her most conservative mode, still clipping out a little compared to 0, right? Now, it's not magic that this performance on 9 trades happens to coincide with what some people might call a lackluster day in the market and lower than normal volume. These levels right here on the indices at the close were all well below 1. We're seeing updates here after the market, but if we just go back and take a quick peek here using the old historical data, if my fingers will go to the right place here. All right, third time is a charm. There we go. All right, so right at the close on the West Coast here, we can see they were all slightly, I wouldn't say that's slightly, that was pretty significantly below normal. But circling back around to the conversation that myself and Dan were having with Barry, we were all in agreement that, it's really great that the market is flirting with all-time highs and we're in this, incredible bull market. But even more beautiful is that really, in all reality, that's just a detail, because whether the market is ripping up to all-time highs or whether it's flat or, at some point in the future, the market will turn and we'll have days where we go down, down, down for many days. But it just really, when you boil it down to its bare essence, every day has opportunity. Now, of course, the days where you can just buy your initials and everything works, those are great, but we all know they're few and far between. Most of the time, when we're in the moment, it's the same, right? We're looking at certain plays, we're looking at certain metrics, and we're trying to figure out, is this thing going to go up? We're going short. Is this thing going to go down? And I'd rather just be in the money. I, preferably don't want to have to sit a big wiggle. That's what we all want as traders. So when we see the Holly performance like this and the low volume days, makes complete sense, right? Sometimes there's a lot more game to be hunted than other days. There'll be a couple of days this week that are going to be pretty darn good. There's no guarantee, but I can tell you Tuesday, Wednesday could be pretty interesting. Now, with Holly's trades today, let's just take a look at the individual trades, and we can see that, a lot of the times when Holly's done for the day, we can sort by risk on, and we can see a lot of money that was left on the table when Holly gets out, what we might term prematurely, but once again, we always like to go over the fact that Holly's strong point are her statistical entries, and typically if we see Holly getting out on a profit save, there might be a little bit more meat on the bone. But we can see here today on UCTT, she took 8 cents at the end of the day. Not really that much of a difference. The biggest difference, which was about 2x, from a cents standpoint on the CRBP, is right here. And of course, a lot of people like this entry today because it was centered around the whole number. Sometimes they are, sometimes they are not. But we can see Holly's entry was right here, and then it was pretty much just off to the races. It took an up move, nice little pullback, and then on to what later became the highs of the day. So risk on, holding all the way to the close. There was a little bit of meat left on that bone.
Very little. I'll just chime in. Everything you see today directionally was long. The market spent a little bit of time with some strength this morning, and then it got weak. And that's really, I think, the overshadowing reason why risk off worked better. The quick hits quick in, quick out. And then if you've got nothing but longs, sitting in a market that's just bleeding for most of the day, it's really not surprising that a lot of those profits disappeared and risk on, definitely went south today because there was no real good backdrop in the market to help support them. A lot of noise.
Yes, and then we can see for the rest of the day, it was really doing a good thing for us. AUPH, the time stop trigger for 24 cents, had she not gotten out, would have eroded down to only a penny profit by the close. And even more standout down here, I mean, this KSU, Holly gets out for a 10-cent winner actually, and then this thing folds over and goes 72 cents to the downside from the entry point, an 82-cent move to the downside from here to here. So definitely keeping things nipped in the bud on there, and then of course get stopped out on the bouncers today, 25 cents versus 95 cents. So all in all, pretty lackluster day, but the model in and of itself
was a model of risk management.
Exactly. I couldn't be more tickled at the performance today. It was almost a, sit on your hands, take the cookies while they're passing them around, because they're not going to come around a second time today. So once again, not only do we get plays from Holly, but based on how she's doing in the first 30 minutes, hour, 2 hours of the market, that can be a good informational edge on, what we can expect for the remainder of the day. All right, so now we're going to take it one step further, and we're going to talk about starting to archive the Holly plays for future setups or end of the day scanning. Now, we know that when we double click on Holly's blotter, it will populate the charts with all the entry and stop loss information. We recently added a function where we can right click on these symbols, whether it's Holly's window or any other alert or top list window. This functionality resides there. So if I right click here, I now have the option to send the symbol to a symbol list. Now if I hover over mine, you can see there's my Holly list. So before you try this, obviously you'll have to create your own Holly list, which is relatively simple.
And before they try that, they've got to download the newest beta. It's the version 4.0.122. It's on our website, but it's the beta version. And if you've got that beta version, you'll be able to right-click and do this action that Jamie's going to demonstrate.
Right, and no better time than the present, Steve, just to kind of give everybody a peek at, okay,
what to look at, yeah.
Here we are at our home page, right? All we do is we click the big Download TI Pro button right here. Once we do that, it's going to take us directly to the production version, which is this guy here. But to get to that beta version, just scroll down a little bit and click on this guy, 4.0.122, and that will have this new functionality.
Yep.
And, I'd always recommend that. If you always want the latest and greatest without having to wait for the production version, download the beta. Our programmers do a pretty good job at making sure that thing is stable before they release it. So, you can have both versions installed just for backup.
Now you can create a watch list.
Yes, we can. All right. So I would recommend everybody do this as soon as possible. You don't have to wait for the next session. So we just go in here and we say symbol list. You can see I created Holly. It's real easy. If we don't have it, we just hit the create button, type in the name of the list, and then bingo, it's created. Now the little number to the right is it's always going to tell you how many symbols are in your list. Currently, just the 9 symbols that Holly produced today are in my list. So as these plays come out, after you create that list, just as simple as right-clicking and saying send to, and then pick your list. Boom, you're Holly. Then it'll automatically be in there. All right. So whether you attach that list to stocks hitting a high or stocks hitting a low for like intraday activity, you just want to keep your fingers on the pulse of those symbols, that's fine. It's really whatever you would like to do, whatever you think is going to give you the most value. So keep in mind, we're not just going to save these today and then forget about it. We're going to continue to build that Holly watch list. So there's only 9 from today, but how many plays, how many symbols are going to be in this list by the end of the week? What gold is to be found by scanning these symbols end of day? Well, I'm going to start everybody off with just a general idea, and that is posting these symbols into a top list. And of course, the cool thing about working with a list is when we go into configure, we don't even have to worry about filters because we're just looking at this specific list of stocks. Then it just becomes about, well, let's pick out all the metrics that we find interesting. And of course, that's going to vary with each and every trader out there, but I've tried to pick some columns here that, you know, are general, that everybody likes. Now, of course, other than the very basic things like symbol price, how many shares have been traded? Well, everybody always kind of likes to know what's the volume like in the stock today. So you can see here, sorting by relative volume, and this is right now. And if we looked at the close, let's just take a look at the list at the close. Okay, so this is what the list looked like right at the close. And we can see here are all of the symbols that Holly issued. And interesting point number 1, look at all the relative volumes on how these guys closed today. We all know one is on pace to do normal volume. Even the worst one came in over 1.04 for TCBI. But look at these guys, almost 5, 3.5, almost 3.5, slightly above 3, almost 3. So interestingly, these guys were kicking out some decent volume today. Now, okay, what about options volume?
Yeah.
All right, that's
what
always
about it?
And I'm going to sort by, this is total options volume today, looking at put and call contracts, comparing to what is normal. So a little bit different of a metric here. This is percentage versus relative volume, which is not percentage. So normal for this column would be 100. Well, okay, interesting point number 2. 3 times normal options, 3.5, 4.3, almost 6, and slightly over 6 here. So interesting things bubbling underneath the surface on not all of, but a good little handful of these Holly plays today. Now, you know, some other interesting stuff up here, because since we've kind of been remaking the whole trading low float, or reinventing, you know, trading the low float movers as of late with, well, a number of different scan windows that Dan and company have produced, and a lot of crazy gains being taken out of some of these low float movers. So just one more piece of what we might perceive valuable information here. Hey, how many shares are in the float? You know, RVLT, 12 million shares, 16. You know, in this environment, a lot of people are considering anything under 20 million shares to be a low float stock.
I'm going to jump in. The volume 5 minutes is one that I had suggested to Jamie that we add because, you know, when a stock is approaching a level of interest or a breakdown or a breakout or a pivot point or just going to new highs for that matter, I love to see volume at least 300, 400% on the 5 minute. So that means in the past 5 minutes, there is activity and it's currently moving. So that's another interesting metric that you can add, the 5 minute volume. And if you got, you know, good high 5 minute volume percentage next to a stock that's got a really low float, it's making highs, maybe it's got some great options volume in there as well. Those are some key points to the puzzle that's why we created the top list, was to try and look at data in many different forms, in many different arrangements, and get a few pieces of the puzzle. But I did a demonstration, the same thing last Thursday, but I dropped all my Holly stuff into something that's just basically making new highs, which is more for kind of real-time day trading thing. But going back to the argument where we hear a lot of people say, well, these just look like day trade scans. Well, what Jamie's showing you here is an end of day scan that can give us a roadmap and maybe have a couple of ideas that we can mark up for a possible swing trade. So this is essentially a new way to look at the end of day scan. The symbols weren't created by us, they were created by artificial intelligence. So now we're trying to find a good way to keep tabs of them and not lose track of them in the coming 2 or 3 days as we move forward. So the one I did the other day was a demonstration just using new highs, but Jamie's got a lot more going on here with the ability to match many data points and look at these things on many different data type levels. Again, I really enjoy looking on this particular one, the options volume, and then the 5-minute percent volume. I think those are very key.
Right, and as Steve was saying about the 5-minute volume, that's really a strong metric, especially in the middle of the day when key points are being approached, because that's how we can quickly see, hey, is the volume there or not? And that's really all that matters when you're looking at it from a trader's perspective. Okay, I see relative volume is high at any given point in the day, but relative volume is a very slow metric to adjust. So the stock may have had a torrent of volume early on, but it's backed off. And now not only is the volume not even normal, it's below normal. But relative volume is still showing me 4.6, but that's because it's slow to adjust. So see, this smaller time frame here can be very invaluable during the day, because whether you're looking at our charts or anybody else's charts, these volume bars on charts, they're not so good for in the moment unless it's really standing out. And sometimes what we think is a standout on with our own eyes is not. But when you can quickly look here and go, oh, okay, 5-minute volume is 6 times normal. It might not be so evident on the chart, but a great way to get that type of information right now on the fly instead of trying to make sense of the volume bars on any chart.
So what happens now? We're at the end of the day. We've got kind of an end of day scan. What would we do next if we want to keep our eye on something and make sure we don't miss it in the future?
Well, I've installed a couple different things here, Steve. We got position in the daily range, which is just what the range was today. So we could quickly take a look and go, okay, well, we don't even have to look at a chart. We know that TCBI closed pretty close to its low today. So here it is. Now, what's it looking like on the daily? You know, do I have any interest in this? And, you know, looking at this thing, I mean, I don't know. I mean, kind of in no man's land here, Steve. Doesn't really do a whole lot for me just looking at this. I mean, a quick take, maybe if it gets down to here, it'll bounce, but nothing really jumps off the chart at me here. Maybe we watch it and see if it starts to establish its little base camp here, and it's going to cycle back up. But if I look at this guy, let's see, let me find the right one here. I don't know if, okay. When we look at a guy like this, though, LPCN, which was this guy down here, kicked out about 400,000 shares today, traded almost 6 times the amount of options as it normally does. Relatively low floater, doing good volume right at the close. I can see this is positioned in lifetime range. It's not at its all-time low, but it's very close. And when I start looking at this chart, hey, I've seen this song and dance before. It looks like a little thing we call trend change lubricant. So if we expand out a little bit here, well, we've already missed a couple of key levels here, but, you know, we're getting back up to here, Steve. So this is the only thing that sticks out in the short term. If we do get a kick above this little line right here for the morrow, I mean, what do you think? We could have some room in this bar here, or maybe up to here. Or am I completely out in the woods here?
Is there any short float action going on there? Is that 11% on that one?
Good question. So here I did install the short float here. So on this guy right here, see, none of these guys have exceptionally high short.
Nothing really, yeah, nothing really exceptional.
Yeah. Now, if we take a look at years, we're getting kind of the same type of setup here. You know, we've got the little, look, there's a little horseshoe. Whoop. Okay, and now we're coming back up to these levels. But, you know, do we have room up to that line? You know, if the stock opens strong tomorrow, do we have a little bit of room up there? Are we going to peter out right here? You know, so not that all of these plays are going to be beautiful setups. Of course, the ones that stand out probably are going to be the ones that are flirting with their all-time highs, just due to the nature of the market. And of course, we got a little bit of a low dollar, stretched out pattern here, looking way back. Squished my chart up as far as I can. I don't see anything to the left here. All I see are these next levels here, because we popped out of this little wick today. All that's holding this thing back is this top from way back here. So this might be a new channel for this guy to make a home in, or could just bust out tomorrow, depending on the options volume and the volume that the stock is doing. But definitely some things to keep your eyes on moving forward.
A couple people are asking how the volume 5 minutes is being calculated. It's actually specific to that particular symbol, and it's looking back, I think, 3 or 4 weeks in the database, chopping it up into 5-minute intervals. So when it comes up with that 5-minute volume percent, it's not just pulling it out of thin air with a little bit of data pool from yesterday and today. Trust me, it's going back a few weeks. So there's a really good baseline value for how we calculate that 5 minute.
Right, and that value is different for each and every stock, because just to let everybody know, we archive every tick of every stock. So, our database knows coming into today's session, okay, stock XYZ usually trades 400 shares every 5-minute period, and then it can make its adjustments and show those values. So,
and not to be confused with relative volume, which I'll be happy to explain. Relative volume is a ratio. You can highlight the column there. So 2.8, that top one, well, okay, we'll go to 4.98. Basically, relative volume, the term relative means relative to this time of day. So Trade Ideas knows what the run rate for every single stock is out there. So if it's 10:30 East Coast time and stock XYZ has done 200,000 shares, normally that's going to be a value of 1. But if it's 10:30 East Coast time and stock XYZ has done 400,000 at that time of day, that's a value of 2. So the relative volume is constantly calculating volume throughout the day and comparing it to its normal run rate of where the volume should be. And again, it's calculating that just like it does for the 5-minute. It goes back many, many days and uses many different baselines. So we can see when stocks are coming out of their normal relative range. I'd always like to see a stock doing at least 1.0. That means it's doing its normal volume for that day. I will definitely avoid stocks when I see a relative volume of like 0.27. That's basically something that's just going to sleep for the most part.
Yeah, 0.27 for sure.
Yeah, so the run rate, it's going back a few weeks, guys. It's going back a few weeks. It's not just averaging it over a day or two. It knows every tick, it knows every time of day block and where each symbol in our U.S. market, thousands of them, should fall within that time of day block. So I always just tell people relative volume, the term relative means relative to this time of day, and that number can change throughout the day. The values that James is showing you right there just happens to be where the stocks went out. So that first one, our VLT, went out at the end of the day doing just about 5 times more volume than it normally would. But that number will change.
With a finishing tally of not quite 228,000 shares, it's also relative to what a stock normally trades. So if at 228, we can extrapolate, it usually doesn't trade that much volume, maybe 50,000 shares a day on average. But today was very high volume for that one in comparison. Right. So And everybody just keep in mind when we're talking about establishing these baselines for 1-minute volume, 5-minute, 10, 15, 30, and so on, all of the filters, we're keeping all that information for slightly over 3 calendar months, right? Slightly over 60 trading days. So we're always maintaining that baseline average, folding in the new day, kicking the last day out, so that it is a relatively what is happening now type metric. All right, so let's just do a little time check here. All right, we're not doing too bad on time, Steve, but hopefully everybody gets it, how to, I saw a question. I think Leanne was asking the question. She missed how to get the Holly trades in there. So I'll just go over that little step one more time.
Download the beta version.
Right. Now, number one, this is the first day that I've started archiving these. So you're only going to see 9 in there. You know, there's no way to go back and retrieve the ones from last week or before, so forth and so on. So you can start building your list today or tomorrow. But the goal is, at the end of the week, who knows how many plays we're going to have in here. And while out of the 9 today, after we look at these, might only have an interest in watching 1 or 2 moving forward, but that's how we can pare the list down if we don't have an interest in set play. But the more the merrier, and as the list kind of gels and we get up to 100 symbols in there, we should have probably found some very nice little nuggets along the way, all being generated from Holly, but being analyzed a little bit further for potential swings.
Again, yeah, a great example to rehash how a lot of people use EOD, end of day scans. I got to do my end of day scans. And then from these types of top list scans, they'll find a couple nuggets in there. They'll pop them on their watch list for the following day. And if they're smart and they have trade ideas, they'll even set up a price alert window to make sure that they do not miss any of those going forward for sure.
All right,
Okay.
so we got about 10 minutes before we have to let Scott come in here and tell everybody about the discount codes and whatnot. You want to tackle a couple of charts real quick here?
Sure. If somebody's got some chart requests, you can type it in and we can take a look at it and put a couple pairs of eyes on it and see if we can see anything, and I'll answer a couple questions here. Okay, so volume 1 minute on the alert, yes, we do have that. Volume 1 minute on a top list, we don't have that. That needs what we call a custom formula. So I'm going to drop in William on it. I'm going to have you email me directly and I can help you with that. And it looks like somebody wants to look at FI, so we can start with that one.
ESPR, that one was the head fake one today, was that? Yeah, that was Mr. Esper.
Somebody started off with FI, F-E-Y-E. Let's take a look at that.
Right. Okay. For a moment there, Steve, I thought you had the helm. Pardon me. Okay.
I'm sorry.
That's
I mean, I could take it, but
okay, so here's F-E-Y-E.
Oh yeah, okay. So basically we had a gap up to the level of 12 where all the sellers are. You know, ideally we could have a gap of 2 or 3 days of slopping around, and I would mark up a level exactly right there at 12 where today got stuck, and you can see why it got stuck back there. So at some point in the future, maybe it's a day, maybe it's a week, maybe it's 10 days, I don't know, but that could be a level that you could mark up right there above 12, because it seems like that's where it got stopped in the sand once again. So anything else other than that, it's just in no man's land. You know, the gap up, obviously on decent news of some sort. Now the bigger picture is certainly a down trending stock. I don't know what the short float is on that one, but if it's a significant short float, that could help us. Not bad. I mean, that could help get above that $12 level if it ever does come to that. Let's see. I think you briefly looked at ESPR. Did we give any? Oh, jeez.
You just have to show this one just because you don't see these kind of.
We call that the Kansas City shuffle, when you look in one direction and a guy comes up behind you and snaps your neck in the other direction.
Everything's bad. Oh no, everything's good. Okay. I mean.
Don't know what to say about that chart, really. That's really volatile. I mean, I think you just got to let things start to settle back in. I'm not familiar with the news or what exactly happened, but that's one heck of a pro gap going in the opposite direction. I'm not really seeing any edge or any levels in that particular case.
And completely typical characteristic of a stock in this industry. These are the ones that typically do that type of stuff. All right. So MUR or IPHI?
Is MUR a over-the-counter? No, it's Murphy's Oil.
Murphy's, yeah.
You know, it doesn't look bad. The downtrend is so obvious, but it might need a day or two to really show you that it wants to break through that downtrend, because right now it's pretty much locked up You got a couple of nice tweezer bottoms, as they call it, those wicks. And if you look left even further, that's some significant support. So I would say the range right here in Murphy's Oil, is roughly 25 to basically maybe a breakout around 28. If you could get above 28, that could be breaking that downtrend line that's been happening since last December. But right now, it's just it's trending downward. It could easily roll over and make that be a lower high. But what I do see is that big base that is showing up there at 2450 roughly over the last few months. All right, let's take a look at INAP. INAP is it's coming out of the doldrums, but it's getting ahead of itself. This is the kind of thing I might look for a pullback entry. Maybe the top of that wick might be as simple as it gets, where you could set a pullback entry, and one of these days you might get the algorithms running the stops on the open, and before you know it, you've got, I would even do a markup. I'd do an alert. I would just put an alert. Jamie can do a markup, but I'm talking to you guys. Have an alert pop up to where you don't miss it, where maybe in the first 10 minutes the selling is so brutal, but it stabilizes down there at that orange line, and you start to watch the price action for 5 or 10 minutes, and you see on the level 2, you see a big bidder jump in there. That could be a very interesting pullback level to me, because it does look like it's getting ahead of itself. However, in the bigger picture, it is rolling nicely off of that bottom that it put in. So it looks like it's trying to maybe pull itself back into the accumulation phase as stocks go from euphoria to depression to volatility to capitulation to nobody cares about it to people start thinking about it again, and then you get some early accumulation. That could be what's going on with INAP. But I'd feel more comfortable waiting for a pullback on that one rather than chasing 7 or 8 green candles up here. What do we have after INAP? INFI, the other one that was on there, I don't know if I have. The INFI looks very similar to INAP. They're probably one and the same. Again, a pullback in this INAP to maybe 305 could be interesting, and that could happen in a day or two, maybe just a day, but it could be an interesting way of letting everybody that bought INFI above 350 suffer the wrath of buying 3 or 4 days of green candles, and they deservedly so, deserve a pullback. The markets breathe. They go 3 steps forward, 2.5 steps back. So if you're going to buy that 3rd day of a green bar, you better be prepared for the market or the stock to take a breath. And what we can do is look to see where might that breath come back to, and maybe try and mark up that spot. What else do we got?
Well, if you were an algorithm trying to shake out people, and if you're every other trader on the planet, and you kind of got up in the trees and bought that thing, and use these levels as your stop loss, well, didn't work this time. Is it going to work this time? Maybe, but that wouldn't be a bad place to get a fill right there. Just below $3.
We'll do one more. It's a PTX. It's another one that looks kind of interesting. Therapeutics trend change lubricant, trying to break out of its messy downtrend. But you know what? The first thing that always comes to mind is this is a what you want to call it, a therapeutics, pharmaceutical, biotech. They can be a little bit volatile, but this thing, what do we have on our short squeeze indicator for this one?
Here we've got a short float of 35% on this little guy.
Ooh, well, that's really nice. And the amount of shares in circulation, do we have that?
We've got 8 million shares in the float.
Oh, boy. So this is a recipe for a real catalyst. When you only got 8 million shares in the float, and you've got a good chunk of them, I forgot what you said, 30 or 40%. That's definitely the line, 35%. If I was one of those short sellers, I would not want to see this stock get anywhere near a penny or two above that orange line. So that could be the spot. That would be something that I would typically mark up on my trend change lubricant, looking for a short squeeze. I may just have to go back and do that. So not a bad looking chart there to recommend. William, thank you so much. All right, so one last request is, can we have a copy of your useful Holly follow-up scanner? So I guess they're talking about the top list that you created. And then again, you guys remember, you do have to feed this by having a configuration that points towards a symbol list that is named Holly. So if you haven't done that yet, you'll need to do that. But Jamie can drop that in.
I'll gladly drop the cloud link in as I just did, but keep in mind it's going to be a blank window until you attach
Your list, until you populate your Holly trades. So,
Mhm.
but it's real simple. New watch list, call it Holly, download the beta version, and now you can right-click right off the symbol page, right off the Holly's trades, and send to watch list named Holly. And then from there, you can build any scan you want, new highs, new lows, taking off with big volume. Maybe you want to have a list of Holly trades that are exploding with volume so it doesn't show you all the other ones that are just, doing their own thing. There's many different ways you can go with creating a Holly list for the future following days. Going forward, it just depends on what you really are looking for.
Right, and in closing about this list here, I will say this. I was really surprised when I saw these options metrics in play. And of course, if the stock is doing heavy volume, sometimes, but not all the time, you're going to have high options volume as well. But, a lot of the times when you see the high options volume first, the volume is going to be there. So interesting, and is this going to continue to be the case? Or is this just random? And the beautiful part about it is we'll be able to follow it in real time. If you embrace this technique, start archiving these Holly plays, making them end-of-day scans. It's going to get very interesting. Let's just say that. So without further ado, Scott,
All right.
You're waiting in the wings. We're ready for you.
Yeah.
All right.
Thank you. All right, yeah,
And I
so
believe I
something
can
we
even
like
pull a slide over here for you. All right.
Oh, you know what? It was kind of, mic was a little away from my face there. Hey.
Yeah, it was. There you go. You sound good.
That's much better. Yeah, so something we like to do to thank everyone for joining us is provide a discount code. So the code that works this week is ProHolly, all caps, just the way you see it on screen. You can also download a handout with some of this information by going to the handouts panel on your GoToWebinar interface and clicking on download there. Just right next to where it says handouts is a little arrow thing or a plus. You can click on to expand that and grab that. So it takes 15% off your first month or year of either standard or premium. And that's a great way to get into Trade Ideas, considering even the standard version of Trade Ideas includes a full hour of one-on-one training. So as soon as you sign up to become a member, you can book that, although you may want to get a little seat time in with the software first, attend some trading room sessions, and watch some videos, and then book your training. But either way, it's a fantastic deal, and that code is good this week to save you some money on joining the Trade Ideas experience. Also, I saw we skipped through some cards there. If you wanted to go back, we could remind everyone that we do have a podcast we'd love everyone to join up with. And a way to do that is just search for Trade Ideas Podcast in your favorite podcast application and go ahead and add us to your subscription. We had a great one there on Friday where we had Jamie and Dan were hosting it. We had Barry Anderson, our trading room moderator, and he came on and had a lot of great insight into what it's like to actually run that trading room. It's a very busy one, lots of growth, so it's an interesting conversation there in addition to the market info. So go ahead and sign up for that and become a member of our podcast subscription base. It's good stuff. Again, we have that code, ProHolly, that's available in that handout. And if you have any questions, just go ahead and email us, info@trade-ideas.com. Or you can reach out to Jamie directly at jhodge@TradeIdeas or Steve@TradeIdeas. And follow Steve and Jamie on Twitter. It's QuantBots Jamie and Today Traders Steve. You can also follow our CEO, Dan. He's Trade Ideas 1. And like us on Facebook, Trade Ideas Pro at Facebook.com. We post some different stuff there that you can share with your friends on Facebook. Thanks, everyone. We'll have a Trade of the Week webinar tomorrow, so if you're registered for getting the Trade of the Week newsletter, you will be invited to that. And then a couple other webinars on Wednesday and Thursday. So thanks, y'all. We'll have the recording up tonight. Thank you, Steve and Jamie.
All right. Sounds good.
Hey, thanks, everybody. Thanks for popping by, and have a great rest of the week. And we'll see you tomorrow, Steve.
Thanks, everyone.